for every position, because without financial product knowledge, I don't think so there would be interview for investment banking at all. At least you may expect 2 to 3 questions, not more than. And if, because in India, like we have a trend, you can expect 75% questions on investment banking products. What is Treasury Bills? What is call loans, government securities, repos, how it's work, what is bill of exchange, promissory notes, mortgage backend securities, which is MBS, ABS, asset backend securities, right? You can expect questions on those debentures, bonds, collateral loans, CLO, CDO, collateral debt obligations, collateral loan obligations, right? Okay. So we'll continue from this financial market. Financial market has a different types: money market, FX market, capital market, derivative market, and commodity market. Apart from that, you can see the different markets as well, right? But these are the main branches. These are the main streams that you can see under the financial system or financial market. Apart from that, you can see the insurance market or mortgage, right? There are other markets as well. But for us, the important ones, which is money market, capital market, FX market, and derivative market. Okay. Yeah. So I'll share this document as well. So Excel sheet. Just focus on listening and raise the questions as much as you can, because I want that you're getting the knowledge from the session, right? You're getting doubts clear and all, because that doesn't make sense. Still, if you have a doubts, now it's a time where if you still carry your doubts, then nobody will help you to understand that, because when we grow, when we means have experienced, then it's a bit difficult for us to even to ask someone, hey, can you help me to understand the terms? But I'm a trainer, so you can ask any doubts that you have. Okay. So here, so the capital market, it's a platform where the investors, brokers, agents, custodians, right, stock exchange houses, investors, buyer and seller, they all come together, even including government, right? Because everyone has their own goals, I would say. Because buyer is looking for a seller is looking for a buyer, the agents or the brokers, they're looking for a commission. That's what they help buyer and seller to execute the trade. Custodians, they offer safekeep services to the clients, buyer, seller, and other counterparts, right? Exchanges help buyer and seller to come together to match the demand, price, right? Or the whatever quantity they have. So it means every players, they will be there under the capital market. They all have their own different functions, but they all have a common goal, which is the trade should be executed on a platform, this under capital market platform. The counterparties should receive their consent or the benefit or cash or quantity or whatever commitment that they have between buyer and seller. The rest, the broker, the agents, clearing agents, they help both the counterparts to execute the trades smoothly. That is also important. Okay. So that's what the capital market is, one of the important platform. So that we say, and you may expect questions on that as well. But as experienced one, you need to elaborate like this, right? The way I have explained it. It's not only that only investor come together and to buy and sell in securities. But there are other players as well that they play vital role in execution of trades, settlement of trades. Government raise the capital from the capital market again, or fund government bodies or agencies, they raise the capital from the this marketplace only, maybe through equity, maybe through debt, maybe through money market instruments and all. They raise the capital for a government's projects, could be infrastructure projects, could be any other projects as well. And the similar way, companies also they raise the capital from this platform. Private limited, public limited, maybe LLPs and other investors or other companies. Okay. So the capital market has two types. One is stock market and another one is debt market. Stock market include primary market and secondary market. People call primary market as a gray market as well, or the market for a newly listed securities. Let's say you have your own private limited company, XYZ private limited company, right? And now you're looking for investment. Investment, let's say you want to raise the capital from a common public or maybe mutual fund and hedge fund houses. Then how you can raise that? In that case, you will have to list your company or company's securities on a stock exchange where the investors can exchange the securities easily. So that all the activities happen in a primary market. Primary market, it means it's a place where the investors or the issuers they can negotiate with each other. Okay, and another one would be the secondary market where once the security is listed through IPO, initial public offering, the all securities will be traded in a security exchange market. That market we call secondary market. Here you can see the NSE National Stock Exchange, NSE or not NSE, London Stock Exchange, the New York Stock Exchange. These are the platforms. So that comes under the secondary market where you can buy and sell the securities. But for interview point of view, you may expect questions on what is the difference between primary market and secondary market. Primary market is for newly listed securities. If the private limited company want to convert into public limited and they are looking for a funds from the other investors like retail investors like you and me, maybe mutual fund houses, hedge fund houses, they can, in that case, they can list that securities on a stock exchange platform where they can raise the capital. Okay, so that IPO events will be launched in a primary market. And in short, you can say the market which is for a newly listed securities or newly issued securities or IPO events, that you can say IPO or FPO, further public offering. Those are just event names because let's say you're a private limited company and you want to convert into public limited, then you want to announce something. So that announcement we call initial public offering. Offering, it means you're offering your securities to the public where common public can invest into it through mutual fund, through hedge fund, or directly also they can invest into it. And all that issued securities will be traded in secondary market where the buyer or investors can sell the securities or buy the securities easily. Simple. Okay. Oh. Yeah. So first of all, we'll discuss something so you will have a better idea about it. So the fund life cycle, that is also important. How it goes, different stages. Let's say you have an idea. Idea, it means you're an entrepreneur, you have developed something, and that the idea is related to, let's say, XYZ. Uh, your idea name is XYZ, and that the idea is from a fintech industry. From fintech industry means financial technology. That industry we call fintech industry. And your idea is more into the blockchain technology. It could be any idea, but I'm just giving an example to you. Okay, blockchain tech. So this idea will help to the customer to transfer the payment from one country to another, and that is in a very minimum cost. So now at this point of time, if you see, we have a huge legacy, right? You are sending payment to the people account, and people account that converting that USD into INR and sending that payment to my bank account. It is almost taking 1 week to transfer or receive that fund to me from you. And with almost 20 to 28% charges. So just think, that's what uh, you have developed some unique the blockchain technology which will help people to transfer the payment means directly to me. There is no need of any other institutions which you need to send the payment to them, and that the institution will convert the payment into different currency and then send it to the end user. No. So you're gonna directly send the blockchain, the technology, the way you have developed. So where the sender can send direct fund to me, and there are technologies already which is are in the market, Ripple and all. So just you need to log in the account, convert your USD into Ripple, and send that to me directly. And the same way here also I'll do the same. The Ripple will I'll convert into INR and send the withdrawal request to the bank, and within 1 hours of time span that the request will withdraw means I'll receive that amount to me directly in India. Okay. So initially, this was just an idea, but later on, you are looking for a fund, let's say. Fund, it means investment. And you requested to me, hey, Shivraj, I'm looking for a fund. So are you interested? But before that, definitely you want to reach out to your nearer one, means closer one, family members, friends, husband, or any other who are in your family. Let's say they said like we are not interested in fintech and we don't have much even fund to invest in your business, so why don't you look for others? In the initial stage, even the bank will not provide fund to you, simple. So it means loan option that you don't have at the initial stage, so nobody can provide loan to you. Why they will not provide loan to you? Because you will not have a history, credit history, right? That's what. So then you approached to me. I said, okay, yeah, I'm interested in your business. Your idea looks lucrative, and yeah, even I'm also interested in fintech product. So I'm gonna fund to your business. At this point of time, what we're gonna do? Uh, we'll sit together, evaluate the idea, right, and then we're gonna put some value to that idea. Let's say the beginning value of the value of your idea is 10 crore. How much? 10 cr. That you can, let's say 10 cr in USD. Okay. And here, if the idea's value is 10 cr, then how much fund that you're looking for? Let's say 20 cr. Sorry, the 2 cr, the 2 crore that you're looking for. You said, hey, Sivraj, I'm looking for a 2 crore investment. I said, okay, that's fine. So here, the 10 crore would be the 100%, correct? This logic is very important. So 10 crore would be the 100%. So the 2 crore would be 20%. Can we say that? So here, when you propose that, yes, so I'm looking for a 2 crore, then I'll say, yeah, I'm looking for a 20% ownership in the company or in the idea, I can say. You said, yes, I'm agreed with the terms and condition, then we'll sign the term sheet as well. And then I'll transfer that 2 crore amount to the business account. But at this stage, if you received funding, then I would be the angel investor. Angel investor. It's kind of God. God sent that person on the planet to help to you that you can relate with. So that investor we call angel investor. And there are the big, let's say Elon Musk, he's an angel investor. Microsoft owner, he is also angel investor. There are so many investors in India as well. Ratan Tata, Ambani, Reliance family, Adani Group, they are angel investor. They actually find out such unique startups, unicorns, and they fund to them. They offer funding to them, like 10%, 20%, and all. So this happened. In a reality, this happened. But here, from an operation point of view, you don't need to work at all, right? So they hired their accountant and all because the business would be at a startup stage. That's what they hired accountant and all, and they offer salaries. But here, we don't need to maintain, much accounting and all from a job perspective. Because just the initial stage of an investment. But this funding round you can call seed funding also. Which funding? Seed funding. Because your idea is like seed. So once you saw that, once you cultivate, so that the plant will grow, right? It's like a tree. Seed. Okay. Let's say this funding later on. Now, if you see the ownership, your ownership, your ownership share, which is 80% or 80%, it means 8 crore, 8 CR percentage, and this one would be in CR, the value of your percentage. And mine, angel investor, which is 20% and 2 CR. Okay. Later on, after 2 years, again you're looking for a funding. But now you are not at the beginning of the stage. You have already crossed that level. You have leveled up your business to the next level. Now you have a customer base, clients, all right? Now people are using your products and they're paying transaction fees to you as well. So it means your business has started to generate the revenue, not the profit. And again, you're looking for a funding. It means if you push to a business from one level to another, so that business will help you to actually multiply the value of your 80% percentage or 8 crore. So this value will be something different. If you have a customer base, you can add that value, right? You can acquire one valuer, so that valuer or accountant will help you to evaluate your business and put some value on that particular business. Let's say after doing all the research and all, so you the valuation come up with, which is 100 crore, the new valuation. And this happened in a reality because I also work for it. I also invest into such a businesses with a small amount, not bigger. Now the value of the business is 100 crore because this is not a the beginning of the stage of your business. And now you're looking for a funding. See, as an angel investor, you cannot say that, hey, Sivraj, can you sell your percentage of investment and raise the fund? No, because I'm an investor. I don't want to sell my stake. You are a owner. Then you will have to sell your stake. You will have to dilute or reduce your portion, your share in a percentage. And that's how you can raise the fund. So here you can see 2 crore has been raised to the 20 crore, right? And this 8 crore reached to the 80 crore because the valuation of the business is 100 CR. So now here you can again dilute or reduce your stake because you are not at a startup phase. Let's say you have decided to issue 20 percentage of the stake to sell to the other investors and raise 20 crore. So this round would be that we treat as a venture capital. Venture capital. And venture capitals, those are like similar, like, the private equity funds. They actually provide funds to the startups companies. Startups, it means they are even not a startups, but they are not even well developed companies. So they offer venture capital funding to such a businesses. And here you can see the valuation of a business is 100 crore and the investors are ready to pay the 20 crore for a 20% ownership in your business. And you also agreed, so you can sign the same similar documents, the term sheet or private placement memorandum, or the security purchase agreement that you can sign with them, and you can transfer the 20% ownership to the venture capital funds. Okay, here the another term you can expect, like how you can allocate that securities, right? How you can allocate that funds or valuations to the business, how you can multiply it, right? So there should be a quantity or portion that you can say where you can multiply with the price and then you get an amount, right? So this 100 crore you can split into a shares, and that is depends on you, totally depends on you. If you want to split this 100 crore into 100 crore shares, you can do that. That's absolutely fine. So the per share should be around 1 for a $1, correct? So 20 crore, for a 20 crore capital, you can transfer 20 crore shares, and the value of that particular share is 1. So this is how you can, means shares that come into picture, and this share should be preference shares, not the common stock, which is preference, which will be issued at or offer at preference basis. And those you cannot see the listed somewhere. Those won't be listed on anywhere because those are issued at a issued to the private investors only or limited investors only. This is for just an valuation purpose and the documentation purpose, that at least you have something, so which they represent the value of that particular business, so that the document we call the preferences. Okay, so are you getting my points, right? Okay. Then later on, okay, so here the one thing that you can see, this funding will happen in a rounds. This would be the total commitment from the venture capital side, and the venture capitals, they can, means release the funding to the business in a stages or rounds, that you can say first round, second, third, maybe fourth, right? So every round, so you can transfer, or as a fund venture capital they can transfer 5 crore or maybe 7 crore, 8 crore, but yeah, total amount would be 20 crore that you're going to receive from the venture capital in upcoming time. And this happened through, like, let's say in a first year that you're looking for 5 crore, in a second year you're looking for 5 crore, in a third year maybe you're looking for again 5 crore, and fourth year again you're looking for a 5 crore. So if you see till here you have raised 2 crore and 20 crore, it means 22 crore that you have raised as a capital from the external sources, right? But now here your complete private limited company. Why your private limited company? Because now you have a customer, you have a funding, right? And you have everything. But might be your business is not able to generate the profit. Revenue, yes. If you have a client base, revenue would be there, right? But now again you're looking for a funding. Till here again you're looking for a funding. So what would be the options for you? The first option here, you can try to reach out to the bank or maybe wealthy investors like Elon Musk and ask them to fund to your business, correct? And let's say when you risk at a private limited company, your valuation risk to the 1000 crore. And now at this point of time, you can see your share should be 60%, correct, for a 600 crore. Venture capital VCs 20% for a 200 crore, and my contribution as angel investor here would be 20% for a 200 crore. Invested capital was something different. The value, see, once you achieve something, so that the invested capital again will multiply it automatically. So that's what people means, believe on investing. Automatically, so once the time pass, the automatically your investment will start to offer attractive return on your investment. Your value will be multiplied automatically. Every year, the value of your shares or investment will be multiplied in a compounding way. 600 crore will be 6,000 crore after 10 years. So this is a compounding way. 200 crore will be 400 crore, maybe 2000 crore. It will convert into 2000 crore, maybe 20,000 crore. And this happened. There is no magic. Once the time passes, once the business achieves some other milestone, that the value of invested will multiply. Automatically, it will multiply it. Okay. So now again here you're looking for a funding. And let's say here, if the venture capitals and angel investor want the money, they can also submit their voting. Submit the voting for a capital back. This applies to the venture capital as well. As an owner, you can't do this. And if you can do this, so it means there is no owner in your business. There should someone who can operate or the lead to the business or promote to the business. Correct? And in this case, again, you have decided, see, there is no obligation on venture capital. They can also issue their capital and they can, take their money back. They can sell this 200 crore valuation to the investor, other investor, and they can take their money back. The same applies to me as well. As an angel investor, if I don't want to continue with the business, now already I have generated my value. Now you can see my 2 crore has been converted into 200 crore. Correct? This 2 crore, first time that I had contributed, now you can see the value which is 200 crore. So it means I don't see, it depends on my investment objectives. If I don't want to continue with your business further, then I'll also sell my 200 crore investor and I'll take the exit. But let's say business is lucrative, unique, and that's what I have decided or VCs decided to stay with your business. Simple. So it means we don't want to sell the business, we don't want to sell the value. Again, then in that case, as a promoter, you will have to sell or dilute your securities. And here you are looking for again 20% reduction. So this reduction we call dilute in accounting language. Just dilute the percentage or the value and sell it to someone else. Okay, there are funds. Who those are? Those are private equity funds who are interested in your business. Let's say Pershing Square or ICZ. There are BlackRock, Blackstone, PIMCO, right? They are the private equity funds. They are interested in your business, right? You have already negotiated with them that the value on a valuation part, because there's valuations. Private equity businesses, they also perform the valuations of your business in the company, right? And then only they come up with their quotation that yes, the valuation is correct, and now we are ready with this same 100 crore value, 1000 k valuation. And let's say they are ready and they have decided to enter in a business, and those are like BlackRock, Blackstone, and let's say the City Private Equity Fund. Okay, so these are the funds A, B, and C. So the BlackRock is looking for a 10% ownership. Blackstone is looking for a 5%, and CT is looking for a 5%. See, the percentage is not fixed. It depends on the interest of the counterparts. If their interest for more, they can means BlackRock alone they can purchase 20% ownership for a 200 crore. But here they are ready to pay the 100 crore. So this Blackstone is ready for a 50 crore, right? And again City for a 50 crore. And now total amount you can see total commitment amount or deal amount you can say that in accounting you can see the words like total commitment, global commitment, but those are like just capital, that is just a commitment between two counterparts. I have committed to you that I'll transfer 100 crore to you, and that is on a paper. That paper we are calling total commitment. Simple. Total commitment, which is around 200 crore. This is very important for a private equity accounting. Till here we haven't discussed about mutual fund and hedge fund. Okay, this is just a cycle, the capital raising cycle. How this means when the security common stock will come into picture, when the bonds will come into picture, right? So we should know the background of that particular instrument, then you never gonna forget about it. Yeah, yeah, this is a total valuations of a company. Now your company, see, the startup converted into private limited company. Private limited, and this is the value, total current market value. And now that the value you're looking for a sell, see, even though common stock is also again you're actually selling the value of your business. On that paper they mentioned it the face value. If you can check how the bonds looks like, I'll just show you something. See this. It looks like similar to the notes or the currencies. So we sell this 500, means companies they sell the value of this 500 to us. Sorry. And on which they promise to pay you the additional benefits. Could be interest payment or preferred dividend or any other benefit. And at maturity, they promise you so that they will purchase back these bonds from you up to maybe 10 years, up to maybe 5 years, 5 months, 2 months. So whatever the time frame would be, that would be defined, already defined by the counterparts. Okay. So that actually we may split this again 1000 crore into securities, maybe in the bonds, maybe in the other financial instruments, and that instrument we sell to the other investors. Let's say private in a private equity, these are the private equity funds. Right? BlackRock is looking for a preference equity, right? With 8% as a preferred return, that is dividend. Total value, then instruments type, and preferred return. Blackstone, BlackRock is looking for preference equity, and Blackstone is interested in bonds with the interest payment of again 8%, and the CT is looking for a loan obligation, CLO, collateralized loan obligation, and with the interest payment of 8%. Could be different. There is no matter that so all will have a similar return. No, it depends. Let's say they are interested for a 7%. Maybe bonds they are interested for a 9%. This happened. There is nothing is fixed, which is everything is depends on the negotiation. And this actually means that they come together, they sit at one place in a same boardroom and they negotiate. I also do negotiate. If the valuation is not attractive, we raise so many points that how did you reach to this 1000 crore valuation? Can you please explain it? What are the factors? What factors that you consider to, reach to this 1000 crore valuation? Even sometime we raise the questions like this business looks like overvalued. Sometimes we raised questions like undervalued, par valued, right? But for investing, undervalued business is unique where you can generate the returns, and even the par value is also better than the overvalued. Overvalued, it means actually you are paying the high value to purchase the value of that particular business. And in that case, your risk will be high, right? So you won't be able to generate high return on your investment, and this happened. And these are the fund names in the percentage, ownership percentage. If you can see now, the percentage wise, these are the funds. Apart from that, you can see the other one is like angel investor still there with you, right? Angel ones, then VCs, and the promoters still there with you. What about their values? Let's say we don't need to mention it here. Okay. So the values is here 200 crore, 200 crore, 200 crore. This funding also you can expect in rounds, first round, second round, third round. And that's what we maintain the fund accounting for a private equity funds. And nowadays we have a big revamp in a fund accounting opportunities. And they are paying high amount of salary as well. Why they're paying? Because to do the accounting for a private equity fund, which is not easy, right? Every day that we accrued, accrued, it means the return that we accrued on a preference equity. Every day that we record the accrued interest payment on a bonds, every day we accrued that record accrued interest payment for a CLO, collateralized loan obligations, and all we record it. And it's a daily routine job of accountant to calculate the accrued return and to record in the books of account. It's a routine job. It's a daily routine job. Apart from that, if we have received investment from an investor, see, in a private equity fund, so that is not the investment which is made by the 1% or 2%. Here you can see the multiple investors who have invested into the Blackstone, and now Blackstone is investing in your company, right? Do you agree with me, right? So that's what we'll have to do the accounting for investor who have invested in BlackRock or Blackstone or City Private Equity Fund, as well as we'll have to do the accounting for investment instruments, which is the fund they have invested into bonds, preference equity, collateralized loan obligations, and all. So it means we'll have to do the accounting for a fund which we have received from the investor, and apart from that, we'll have to do the accounting for the investment instrument which the fund they have invested into other different types of financial instruments. And that is what here you can see the difficulties to do the accounting. And most of the people they are like freshers. Most of the people, like, they are not from this industry and they don't know what is private equity. They don't know the background that we have discussed behind this private equity, how this private equity come into picture. Even they don't know why this company come up with the bonds, CLO. 90% accountants, they are not able to recognize the transaction in the books of account. They don't know even what is CLO, collateral. It's just a loan. It's kind of home loan that everyone applied for a home loan, right? So where the bank signed the number of documents with us, and because bank wants collateral, that's what they are saying, collateral loan, right? Home loan is a collateral loan. If tomorrow you are not able to pay the loan, then the bank will sell the security in the market and then they will recover the money back. The private equity structure is similar to the home loan. There is no change. If your property is under construction, the way the bank transfer the money to you in an installment, right? Once you're done with the slab, then they send the 10% amount. Once you're done with the interior, they send the or they transfer the 50%. Once you're done with the entire home with all the things, they send the 100% amount to you. Correct? The similar way, private equity funds invest the money in the business in stages. And every stage, the words you can see with the fund accounting, like, so this should be the total commitment, which is 200 crore. That the three, BlackRock, Blackstone, and City Funding, they are investing together 200 crore. If you are a fund accountant, so what are you gonna do? In the accounting system, you're gonna create the account name for a different investors. Let's say there are under BlackRock, there are investors like A, B, C, D, E. And let's say A contributed, because you can see the BlackRock transfer 100 crore, right? But let's say the A contributed 10 crore, B contributed 10 crore, this 20 crore, 20 crore, 60, this 20 crore, 80, and the rest BlackRock contributed. See, this happened with every fund. See the contribution, 20 crore from BlackRock, 100 crore. Means they have contributed 100 crore, like in this way. So it means BlackRock also committed that they're going to offer the 8% prepared return to their investor. That's what here, that as a businessman, as a promoter, you are committing the 8% return on a private equity or on a bonds or CLO to the investors or to the funds that who are investing into your business. Okay, otherwise, if you are not offering 8%, then how this private equity will offer the 8% return on the this particular investment to the investors that they have received from the investor? Correct? Okay, so why the accounting is important? See, your private equity, it means this: the private limited company is at a growing stage. Still, you are not able to generate the profit, but definitely after 1 year or 2 years, it will generate the profit. It will convert into profit. And if your business are in profit, then why will you raise the fund? That is also a question. Could be. But if you are generating profit and you don't want any external debt, so you can sell your value directly. Instead taking loans and paying interest payment, what you can do, you can share the ownership. Means you can invite partners. You can add the partners, sell the 20% value to the partners, get the money from the partners, right? And then do the expansion. So that will help you to save your interest payment as well. But yeah, the partner will look for a profit and loss in equal way. That's fine, right? Okay. So this is how means private equity come into picture in a business. But so they will sign the documents with you with the terms. The terms they called security purchase agreement. They sign with you and they ask to define each and every term. Could be written, then the return of capital process, right? Then other would be uh, the total commitment amount, utilization of that amount, purpose of investment, security type, right? Then the total amount that each investor want to pay or each fund want to invest, that amount we call total commitment amount, contract amount, deal amount. There would be a number of names, different names, but yeah, all the words has the same meaning. That's fine. Okay. So here, let's say you have signed the agreement, you have defined everything that the 200 crore, that the three funds they're gonna transfer to you as a private limited company. You have committed the return for a different instrument, which is for a preference equity 8%, bonds 9%, and CLO 7%. And you have mentioned that the exit route would be IPO. So after 2 years, the date is confirmed. Let's say the date is today's date. This is entire stories happened in past, and now we are reached to the today's date. And let's say today that you're gonna list your company as an IPO. Through IPO. Why IPO? See, here also through IPO, you are selling the value to the other investors because you want to repay the value of all these investors who have invested in your business since the beginning. Venture capitals, angel investors, BlackRock, means these are the funds like private equity funds and all, right? If your business is in profit, you don't need to go through with the IPO. What you can do, you can value to your business, right? Once you have a profit on a quarterly basis, you can transfer that value to them as per their capital along with the interest payment and the value, right? Value, whatever the current value is there after 2 years, with that value, you can try to return the capital to the funds. Apart from that, funds also can look for any other private equity house who is interested to invest into it. And they can sell that current market value. This is invested value. Because every stage, the business is creating a value. This is very important. Okay. So the current market value would be different. So let's say the current market value for all, which is 100 now crore, 100 crore has been now, let's say 1000 crore, 500 crore, and this 500 crore. Because let's say at this stage, developed private limited company, the value of the current value is 10,000 crore. So it means who have invested in your business since the beginning, their also value will multiply it. Correct? Okay. Here, what you can do, you can all sit together, venture capital, angel investors, you, the private equity funds, they all sit together and they discuss about the execution, how they want the execution of their money. They want to list the securities in the market and then raise the funds, or else they can apply, means company, you can apply for a loan, get the loans from the bank, and then send that money to the all investor. Or else, let's say again, I'm very quite interested in your business, so that's what I'll say, yeah, I want to continue the business, I don't want to sell the value. Correct? But that depends on every investor. There is no restrictions on anyone that means you can say, hey, you will have to do this, otherwise no, nothing is like that. It depends on the every investor. They will decide what they wanted to do with their investment. Okay. Let's say we all have decided to sell the investor, but as a promoter, it will have a restriction that you cannot sell the entire value of your investment. Okay. It's very simple. You will have to keep at least 40% with you. Then only you can claim that you are a promoter. Otherwise, you cannot lead to the business. Let's say here, private equity funds, they want to sell their entire stake. PE funds. Then venture capital also looking for exit, right? And let's say I'm also in. Let's say I want to also take the exit. That's fine because the value is pretty seems good. Now it is 2,000 crores, so that I want my money back. 2,000 crore, 2,000 crore, again 2,000 crore, and your value is 6,000 crore. Promoter. Here there are different three funds. That's fine. So they will decide what to do with the money. But okay, 6,000 crore, and the value is to the six means total value is around 10,000 crore. See, as I mentioned, right, if you don't want to go through the IPO and to raise the fund and return their money back, then you will have to do this. See, the venture capitals and private equities, they actually means, they go into the market and check who is interested in this business, and they will sell their entire fund to them or value to them, and they will get their money back. Or apart from that, if all you have decided so that you all are interested in an IPO, right? That you want to participate in IPO and sell this value to the other investors. So what then you want to do? Here you can see this value you can split into the equal denomination. Each denomination will have a value, and that value we call common stock, right? And let's say you have decided to convert 10,000 crore units or shares common stock. So the face value of your common stock is 1 for each equity. So this each one equity value that you're gonna looking for sell to the other investor, right? Because if you can just go back in past and check it, every stage we have sell the value of a business to someone else and raise the capital, correct? And here also, as a private limited company, we are looking for a fund because you want to repay the debt of that VCP and angel investor, right? And they are looking for because they are from the company since the beginning. Now they want the other business. See, once the company matured, you can see the much, the return on your investment. Simple. The rule is very simple. At the beginning, there was a risk. They took the risk. They served all the period, and now they are at the maturity, and now they are looking for a value. Okay. Here, all they have decided to sell it. So will actually the value will be convert into the common stock or shares. And here that you can see common stock. For everyone receiving an equal common stock because as per the capital, which is 2,000, 2,000, 6,000, and 10. 10,000 is the total value. And these are the total shares again. See, at this stage, you can see now they want to take exit through the IPO. All this framework, valuation framework, everything will be done in the primary market. This part will be done in primary market, right? Till the IPO, the company will announce IPO, the valuations and all, everything company will decide and announce. Everything means framework will be done in primary market. And here they will invite mutual funds, hedge funds, fund of funds, pension funds, right? HNI investors and retail investor like us. All will participate in the IPO event. They will actually buy the shares from whom? From VCs, angel investors, private equity houses, and promoters, right? Because they are actually selling their investment to us, and they will take the exit. Here, there your the shares common equity part come into picture. Then they will raise the capital through the common stock, and this common stock will be listed in secondary market, so where you can easily buy and sell the securities on, means a stock exchanges platform where you can see the buy and sell trades. In India we have a national stock exchange, we have a Bombay stock exchange. In UK you can see the London stock exchange. In US you can see the New York stock exchange, right? So where the securities will be listed, and the mutual fund houses, hedge fund houses, they will do the daily intraday trading or buy and sell trading or maybe derivatives options and all on that securities. And here your status of the private limited company will be converted into public limited, because now you have invite to other investors. Yes. Yeah, because primary market, all the framework will done. They will come together. They will discuss how they want to or how much value they want to sell to the others, right? And all framework will done in primary market, and they will launch the IPO, initial public offering event, and they will sell the entire value or partial value to the other investors. So it means other investors will come into picture. I have a live example that I'll show you. Recently, there was one company which is Adani Wilmar. Recently, that company got listed. This one. See the shareholding pattern. Mutual fund, FIIs, those are like hedge fund, public means retail public like us, and the rest, the promoters, they're holding 87%. So they have just sold how much? 18% something, not even 18%, 13% they have sold the value to the investors or other investors, right? You can see that number of shares means they have converted the entire value into shares, which is 571,474,43, means 44% shares they are holding, and the rest the public is holding around 12559,822. And apart from that, if you can see in a graphical representation, see this FIIs, then the mutual funds, right? And this one is like again comparison Feb to March. And if you want the details, all the details, just go and check it in details. DII is public, right? Promoters holding name, the name of the institutions. I'll show you that. See Adani Commodities, Lens PTE, Dhaval. These are the institutions who have invested. You can see the names, right? And apart from that, if you click on a institutional holding, institution, it means like funds. Foreign investors, they have invested around this 26 lakh, 1 15,000, 15 lakh something, means 2 crore, around that you can say 17. There are like number of 17 institutions they have invested around this percentage you can say and the number of shares means eventually the value that at the time of listing your entire value will be converted into common stock where the investor means foreign investors mutual funds who can invest into it and this value you can easily transfer to anyone because security is a freely transferable document. You can transfer to anyone. If you can transfer to me, then I'll be the owner. If you can transfer to your parents, then the parents will be the owner. If you can transfer the documents to your friends, then the friends will become a owner from now on. Public, these are the number of shares that the public is holding at this point of time, right? And this is for a mutual funds because we work with the mutual funds that we should know the names of mutual funds. Is there any? Yeah, say this HDFC Large Cap, Nippon, and Aditya Birla. They are the funds who have invested into it. That's what we do the fund accounting on a daily basis because this funds every time they look for a new funds they invest into it they subscribe the shares and as an accountant, we check the value. What is the today's value? What is the current value? If you can see the change in the price in a one day, the 5% change has been happened in the price of Adani Wilmar, right? So that change that we'll have to record on a daily basis as accountant with the fund, different funds. We are here to rectify that change, identify that change, reconcile that change, and we'll have to record it as well. Because on the base of that, we can calculate the fair value of a securities. Fair value, it means if I sell the security today, then how much value that I'm going to receive. That value we called net asset value, right? So net asset value, it means that we don't do something different like need to calculate the NAV or net asset value. It means we prepare the financial statements, P&L, trade book, then the trial balance sheet, right? So that activity we call net asset value calculation because value we calculate on a document that recording the values of that particular security uh, which is exist on a stock exchanges or maybe in a different markets, correct? Yeah, but from the our point of view here that you can link, so now we have converted equities into common stock and that common stocks are listed on a stock exchanges. Okay, now we'll go back to the first one and start from the shares part. So meanwhile, you can raise your doubts if you have or was. Yeah, yeah. See, already you have sold the value of a business to the investor. Then why the investor will do it again? See, you are an investor, you are a shareholders. Are you investing in equities or stock or mutual funds by chance? Let's say you are an investor and you have invested in my business. Right now, I'm looking for a fund and I'm requesting you to sell your investment to others and support to a business. Will you do that? Why will investor will do it, right? Actually, you're looking for a value. Then you will not do this. The promoter, I'll have to do this. I'll have to dilute my securities. I'll have to dilute my percentage from the business every time. Yeah. See, investor will not do dilute anything. They will sell it directly to the other investors who is invested or interested to invest in that business. So the angel investor, let's say I'm an angel investor, I'll transfer that security to the someone else and I'll get that money back. But I'll not give it that money to you as a promoter, right? Because it's my value. Already I purchased that from you. Then why I'll transfer that to you? No, I'll not do this. Because promoter is running a business, not the investors. So investor will have to play everything here. Okay, so yeah, that was the part means the back end story of this capital market and all. Okay, okay. And yeah, from an interview point of view, so nobody will ask the in detail story like this, but that we should know as a because we are working professional, we should know that story because we never know at some point of time. Maybe you can expect questions on that part as well. So how it's work. So what's the the story behind this equity or preference shares, maybe bonds and all, and how means how their instrument helping to the business to raise the capital and all. You may expect question on this. Okay. But yeah, this was for the understanding in detail understanding purpose of equity, preference shares, and other financial instruments. But we'll see the theoretical aspect as well for interview, which is if you can see the questions on like what is the difference between preference equity and common stock. So where you can expect the fixed income ratio on a preference equity, right? And the repayment will be early than the common stock for preference equity. And here you can see the preference equities issue types will be like the redeemable and convertible means up to certain amount of time the preference equity will be converted into common stock that the facility will be with preference equity. So here, see, preference equity means venture capitals, private equity investors, they will invest and they will, once the security will convert into common stock, then the other hedge fund, those investors will come into pictures. So in that way, you can understand this if you're not able to understand these terms. Common stockholders, again, they are the real owner of a company. They will have a voting right, so they can participate in each and every events of a company. Again, common stockholders are entitled to get the benefit of all the corporate actions like dividend, cash stock options, cash dividends. We'll discuss that later, not in this session, because for corporate actions, we'll have a separate session. Okay. And apart from that, if you see the opportunities for a common stock, which is those are like highly liquid because that's what we have a stock exchange system where you can easily buy the securities and sell the securities. So that term we call high liquid, highly liquid. Okay. Those are like transparent system, high volume for a trading and all. So you can do the trades in a means millions or thousands or lakhs of quantities because funds actually hedge funds and all they do the trades in a lakhs. We have seen that on a portal, right? 2 lakhs, 3 lakhs, 2 crore, 3 crores quantity. So you need to have a high volume for buying and selling, right? And easy to buy and sell. But for challenges with the preference equity that you can see, you will face the liquidity issue, right? Because those securities are not listed on a stock exchange where it's a bit difficult to find a buyer and seller for your requirement. So that situation we call liquidity and again volume as well, right? Volume would be high, but there won't be a buyer who want to buy that security in bulk. That also happened, and there are means what I believe easily the brokers and all are like easily that you cannot get the broker also who is dealing into this market unlisted market and not even easy to buy and sell the securities in the market as well. So those are like practical. The I have experienced it because I do trading in equity. I do trading in preference equity. I'm a trader as well as investor also. Right, I'm investing into startups and all. So that's what I'm facing those challenges. I thought I should also highlight to the others so you can also learn it. Okay. So apart from that, you can see the bond and debentures. Those are like fixed income instruments, right? Bonds and debentures both are similar. They carry the fixed income, fixed and floating interest payment, but you can say interest payment. They carry the interest payment. Apart from that, they carry the coupon as well. Coupon, it means eventually it's a interest payment. Every quarter, company will offer the coupon instead interest payment, but eventually that coupon will have a value. So you can say interest payment every quarter that you're going to receive once you invest into, because we have seen in the that the in the discussion, like the bonds and preference shares and all, they carry the fixed interest payment or the dividend, which is 8%, 9, 7% on, right? Yeah. So for a debentures, for a bonds, you can see this interest payment. You may expect questions on this. What is floating? Floating, it means once the central bank of any country, if the bank announce any different rate, so that rate will apply. Let's say federal government announce any rate, 4%, 3%, that 4%, 3% will apply to the floating rate. If you purchase the bonds with a floating rate, so that rate will apply to you. And if the rate is fixed, let's say 4% is fixed, and if the bank offer any different rate, let's say 5%, 6%, so that the bank's rate will doesn't apply to the fixed rate. Fixed is a fixed, floating is a flexible. So once the government or the institutions or commissions, if they change the rate, then that rate will also change on a quarterly basis. Okay. And types of a bond should be zero coupon, redeemable bonds, convertible bonds. But yeah, it's just an instrument, right, to raise the capital through the bonds. Simple. I don't want to go into depth in the bonds here, because you are also aware about many terms, right? The bond. That's what to spend a time like this, that doesn't make sense. Loan and collateral obligations in a fund accounting, you can, or in a private equity, that you can see, as I mentioned, the collateral loans, it works like a home loan. They sign the agreement with the company and they invest through it. They ask for a collateral, so company will give the value as a collateral, right? And then the institutions or private equity funds, they uh, means provide loan facility to the businesses, right? So that loan we call collateral loan obligation. It's like a home loan. Don't worry about anything. Business loan is not for us to discuss. Other loans. Are you aware about these terms? Treasury bills, call loan, government securities, repos. You can see this in a hedge fund accounting, because every day we do the accounting for this financial instruments. Treasury bills, government issue actually for a 91 days or 182 days, that the funds invest into it, and those are like highly liquid. Those are for money from a money marketplace. Treasury bills, it's a bills. If the government has any project, so government will again monetize that, or convert that project value into the bills and issue that bills to the common public or funds where they can invest, all right, and they earn the interest payment on it. So most of the time bills will be issued on a discount. If the actual value of a bill is 100, so at the time of investment, you just need to pay the 80 GBP or dollar. But at the time of maturity, you're gonna receive 100. Call loan. So this is like bank to bank happened, but from a fund accounting point of view, that doesn't make sense to understand. But yeah, it's just facility, loan facility. You are also, let's say you are a BNY and I'm JP Morgan. Now I'm looking for a short term funds, let's say for 1 week or 2 days or 3 days or 4 week or maybe max to max 1 week. So I'll ask you to transfer 1 crore or 2 crore fund to me, and then I'll pay the interest rate to you on that payment. Okay, it's a short-term loan facility from bank to bank. One bank offer facility to other bank. Government securities could be bonds and any other instruments like treasury bills. Means government also issue the securities, or government companies also issue the securities. Repos will discuss in different session, because it's a we'll have a long discussion on it. BR bank receipt. You don't need to understand this annual promissory notes. Okay. Apart from that, ABS and MBS will discuss in short. Are you aware about asset backend securities and mortgage backend securities? Okay. See, let's say you are a bank. Which bank? Let's say BNY. As a BNY, as a bank, what's your main business? To accept the deposit from the depositor and to offer the loan facility to the investor, correct? Or to the lend or to the borrower who is looking for a loan. Let's say you have raised the 1000 crore as a deposit from the depositor at the percentage of interest payment is 5%. So it means every year that you will have to pay 50 crore as an interest payment to the deposit holders. And these are the names of deposit holders A, B, C, D, E, F, G. Correct? Okay. So now here, let's say if you allocate that 100 crore to the loan holders, let's say I'm Shivraj, I was looking for a personal loan and you have disbursed me that loan to me, right? Let's say Amol who is looking for a property loan, Saurabh who is looking for a business loan, Pooja car loan and mortgage. There are a number of loans, right? And it's a main business of banks to offer the loan facility to the investors or to the borrowers that you can say. Let's say bank disburse this 1000 crore means deposits the amount they have disbursed to the loan holders. And now if you see, they have offered the loans at average interest rate, if you can see 13%. So it means bank is generating now 136 crore on a yearly basis on this 1000 crore loans. And how much deposit they have? 1000 crore. The loans disbursed they have 1000 crore. But if you see the difference between the interest on a deposit and interest on a loan, 50 crore and 136 crore. See, every loan carries a certain amount of time span, right? 10 years, 20 years, 5 years, 10 years, correct? And on a monthly basis, the banks receive the EMI plus interest payment from whom? From the borrowers. But this process takes time to get the entire 1000 crore money back in the bank's account, correct? Who will wait that for next 10 years or 20 years? And in between, you can see the risk as well, where the borrowers may be declared as a default on a payment, right? So you can see the risk as well. So then, how you can mitigate that risk as well as how you can raise the new funds? As a bank, you cannot go with the loan payment. Correct? You cannot ask for a loan as a bank. You can ask for a deposit where the depositors can deposit and then you can offer the loans. So in that case, then what you can do, you can convert this 1000 crore loans into asset backend securities. Asset, it means these loans are the asset for you. As a bank, these loans are the asset for you because, yeah, so their asset is generating the returns, which is 13%. It means 136 crore. So that asset you're going to convert into the value or the denomination, you can say, like equity, that we have splitted value into equity or common stock. The similar way, the entire loan amount that you will convert into the small parts, that each parts you can call the bonds or the asset backed securities. And that value that you can sell to the investors like BlackRock, Pershing Square, Kotak Fund, ICICI funds, UK Family House, maybe US Pension Fund, Tata Trust. You can sell that entire value in a units. Let's say one unit value is 100 crores, so that you can sell such units to them and you can offer attractive interest payment rate, which is 3.5%. So it means you are raising new capital on this particular loan's value. Are you getting me? You are raising this one another 1000 crore through asset backend securities with the interest rate of 3.5. Could be higher than that, but depends. It depends on the negotiation, right? And here you are paying 35 crore as interest payment to the ABS holder. ABS means asset backend security holder. And if you see the calculation, you are paying 85 crore. And if you sell again, if you distribute that 1000 crore, newly raised 1000 crore to the investors, see, again you're going to generate 136 crore. And if you pay 35, so you will have 85 crore. 85 into plus here, if you have generated 86, so almost you're going to generate so 200 crore something interest payment on a yearly basis. That's how the bank's business means they expand their business or scale their business with the help of ABS and MBS. And that instrument we call asset backend securities, and that nobody knows. And we just blindly deposit that money into the bank. And see this how the bank is multiplying the value, how they're fooling us. All right. But we don't know the back end story, but still we do invest. What we believe that the deposit is the safest way, bank deposit is the safest way that we do it. And the bank, how see this, how the bank is doing business on your fund. They are paying minimal interest rate to you, and they are offering the loans to others. And that loans also means they are also generating the other fund on your loans amount. And here the one more see combinedly all loan that we call asset backed securities. But if you are only converting, let's say, instead there are the different loans, let's say they are the mortgage ones, all are the mortgage ones, and from a different customers. If you're converting that mortgage into one document, so that mortgage instruments we call mortgage backend securities. Okay, there is no other difference in it. Okay, and apart from that, because this mortgage, you may expect question on this, what is mortgage backend securities and also you can tell them to convert all the loans into one pool and then split that pool amount into values that each value we called ABS, asset backend securities. And if you are doing the same with mortgage loans, then we'll say mortgage backend securities. Okay, then yeah, I think we have covered much for today. Let let me stop this.